Hello, and welcome to the Gold and Silver Summit. My name is Jeremy Blossom, and I'm going to be your host. Over the next 45 minutes, I'm going to make the case of why you should consider owning physical precious metals inside your retirement account right now. It has been 15 years since we saw banks collapsing. It has been 2 decades since we've seen inflation numbers at where they're at today. We just barely passed the debt ceiling limit. Congress could have sent the government and the US stock markets in a turmoil. And I believe this is all the very, very beginning of what's going to be a long decade for stock and bond investors. It is time to finally consider rebalancing and diversifying your portfolio with gold and silver, and I'm going to show you why. Now, there's going to be a link that the sponsors of this event are going to drop for you. And this link will help you claim up to $1,250 worth of value 100% for free. To learn more, all you need to do is click on that link and fill out the application. Now, before I dive into why now is the time to own physical precious metals, I want to tell you a little bit more about myself and go over some housekeeping items with you. I'm not acting as a financial advisor or tax consultant, and the opinions I'm giving are just personal, and they should not be considered as advice. The information I'm providing for you is for educational purposes only. Past performance is not indicative of future results, and predictions and forecasts are not guaranteed. I will say everything is an opinion, or I'll list this symbol here that says opinion if I'm stating something like that. So who am I and why am I here today? Well, I've got 2 parents that are over the age of 60, and they're asking themselves the same questions that you're asking. What should I do now? And I had spent 7 years working for a hedge fund where I became the youngest principal at that hedge fund's history at just 26 years old. Then I went on and started my own financial advisory firm, and I sold that. I became a 2-time Inc. 5000 CEO and co-founder. I'm also the co-founder of TradeStocks.com, WealthProtectionResearch.com, and StrikePoint Media. And I've decided that I needed to host an event where I can show and tell people how to properly diversify their wealth using physical assets that are liquid, physical assets that behave well in inflationary environments, and physical assets that do well in times of crisis. That's exactly the time we're facing now. And I believe that not now, but over the next 2, 5, and 10 years, people who own physical precious metals are going to do way better, in my opinion, than those who forgo this advice. So, what you should consider when investing in precious metals. First and foremost, do not buy precious metals if you're living off your portfolio earnings. This is not for you. And I consider gold and silver investing as a long-term investment, and you should consider holding it for a minimum of 5 to 10 years. And of course, there are no guarantees of profits owning any physical precious metals. Now, here's a big mistake that a lot of investors are making. They believe that the economy and their portfolio behave in the same way. And the truth is that it doesn't. Certain sectors can do well in poor times. Certain sectors can do really bad in good times. So there's not necessarily the same correlation. The second mistake I see investors make is they do nothing. And the truth is that what we just did in 2020, the US government, the Fed, pumping over $3 trillion into the marketplace is going to have aftershocks. And I'm talking about major aftershocks that aren't going to just affect us today, but for years to come. It's the whole reason why I decided to come and host this event, to warn and teach and educate investors just like you on ways that you can protect your portfolio from what is going to happen next. And since 2022, January 1st, we've saw retirement accounts lose over $3.5 trillion. I believe that this is just scratching the surface of the pain that could be coming for investors who are not prepared. So here's the next thing I want to show you. I have a question for you, and it might surprise you, the answer. What do you think has performed better as an asset class since the year 2000? Gold or the S&P 500? Think about it. The S&P 500 has been on the biggest bull rally in US history over the last 20 years, and it's done pretty well. You may have been invested in the stock market over the last 23 years, and you think you've probably done pretty well. What's the answer? Gold. In fact, gold has outperformed the S&P 500 by over 200% in the last 23 years. And I believe it's going to continue to do that over the next 5 to 10 years. And the information I'm going to share with you will tell you exactly why. But in addition to the S&P 500 not performing well, we saw fund managers also not do well. Managers have also underperformed. In fact, just 10%, maybe a little over, did better than the S&P 500 during the same period of time. Pretty shocking, right? And most of you have your money with fund managers. So that means that not only did the S&P 500 probably not perform as well as gold, but neither did the fund managers as well. So I want you to ask yourself the following questions. If I just kind of surprised you by saying that gold has outperformed the S&P 500, what other misnomers do you have? So here are 4 questions I want you to think about during this presentation. The first is, how confident are you in the US economy and what it will be in the next 5 to 10 years? Are we going to have a really strong economy in 5 to 10 years? Are we going to have a weak economy? That answer is extremely important. And let me tell you why. As a financial advisor, my job was to help prepare people for retirement. They had a lifestyle that they wanted to live. They didn't want to work anymore. And their retirement needed to be there for them. But it also needed to be prepared for what the economy would be like in that 5 to 10 year range. The second question I have for you is, do you believe your portfolio will hold its purchasing power? That's why we're investing, is so that it has the purchasing power. It will beat inflation, and inflation is raging. The third question is, are you effectively diversified outside of stocks and bonds to truly protect and secure your wealth? It's not your fault. The media and your financial advisors and a lot of other people love to talk about stocks and bonds, and that's probably what you are most comfortable with. But there are a lot of different asset classes that can help protect you in times like today. And that's why I'm holding this summit, is to help show and explain to you how gold and silver can be one of those asset classes. Which brings me to my 4th question. Do you have a gold and silver rebalancing action plan? A rebalancing action plan. From time to time, it's important to take a look at your portfolio and rebalance it. What does that mean? It means to reallocate the funds appropriately based off of the current economic conditions and what the future economic conditions may be. So, spoiler alert, I have pulled together the best of the best precious metals companies in America. And I'm going to show you how you can claim your $1,200 free gift, but you're going to have to wait to the end. It's for people who are ready to take action and rebalance their portfolio using physical precious metals like gold and silver. All right, let's go back to gold and silver. Here are some core attributes that you should understand about gold and silver before we go any further. The first is that gold and silver are an asset class. They store wealth. Number 2 is that they're a natural hedge against inflation, meaning that they do pretty well during times of inflation. And number 3, they're a risk hedge. Institutions, banks, and governments use gold to protect themselves against global uncertainty. We'll talk about that in more detail soon. And the 4th is that it's a physical asset that could never go to zero. A house is a physical asset, but it could go to zero. A corporate building is an asset. It can also go to zero. Gold and silver cannot, and it's not tied to the debt of a monetary system, which is really important considering that we've just increased our debt by $3 trillion in 1 year. The magnitudes of this, I'll explain in just a minute, are profound. So what are the drivers of the price of gold and silver? Not only do I think gold and silver can help protect your portfolio, I also think that, in my opinion, gold and silver have an enormous opportunity to build your wealth. The 3 major drivers of the price of gold and silver are, number 1, the weakening or the strengthening of the US dollar. Number 2, the supply and demand of gold and silver. And 3, global uncertainty and market risk. I want you to take a look at this chart. This shows you the inverse relationship between the dollar and the price of gold. In blue, we see the dollar. And you can see that there was a time where gold prices were soaring and the dollar was devalued. Then we saw that the dollar increased in value, and what happened to gold prices. You can see this dance happen over and over again. But take a look at 2000 to 2022. We see that the dollar and gold have coupled, meaning that they started to move a little bit more in tandem. But just recently, they have decoupled again. As the Fed has raised interest rates, gold prices have come back. This decoupling is normal. But what I think we're going to see with the dollar is that the dollar is going to devalue. And I'll explain why. We've printed a lot of money. Take a look at this chart. This goes back to the 1960s. And this shows us the M1 money supply. Now take a look at these gray bars that you see. Each gray bar represents a recession. And the last recession, they call it the Great Recession, was just 15 years ago in 2008. And we talked about quantitative easing. We talked about how much money the government was printing to get us out of that huge Great Recession. But look what it did to the money supplies. It barely made a dent in comparison to what we did in 2020. And this chart alone should make you highly skeptical of what the value of the dollar could be in the next 5 to 10 years. In addition to that, we had the government implement some plans. Joe Biden had his Build Back Better plan, which incorporated a couple of big initiatives. We had the American Rescue Plan, which was worth $1.9 trillion for COVID relief. We had a $1.2 trillion plan for infrastructure. This guy went on a storm printing money to help get our economy jump-started. Here's what it looks like. This is another chart I want you to look at. The gray bar is how much we're spending. The green bar is how much we're making. Now imagine this is your personal household. And if you're spending this amount and you're only making this amount, what is happening every single month? Every single year, you're accumulating more and more debt. This is not good for your household, and it's certainly not good for our economy. And I can't express this enough. It is spelling what I believe could be major pain for investors who are not preparing for this graph. So we have to ask ourselves, where's the government going to get this money? They can raise taxes, and they can also borrow more by issuing bonds. They've been doing both. Take a look at this debt. This is from the debt clock, which is a live debt clock you can watch. And it shows that we have over $30 trillion. We haven't had a balanced portfolio since the Clinton era in the 90s. Since then, we have been in a major debt economy. And if you go all the way down to the right, you see what the debt is per capita. This is a scary number. It's over $500,000 per person. How in the world are we ever going to pay this back? The truth is that we only have three options. We can repay it, we can go in default, or we can devalue our currency. And this is the strategy. This third one is the strategy that the government likes to use the most. The graph that you see here is what the dollar has done since the early 1900s. And you can see initiative after initiative, crisis after crisis, and what we've done is devalue the dollar over and over and over again. And in fact, the dollar is now 99% less than the price of gold. This is what we've done in 2020. Just to try to put a little bit of a visual to it, over $3 trillion is a lot of money, everybody. It's an extreme amount of money. And this is the most amount of money we've printed ever as a US government. And in fact, what I'd like you to see here is that in just 1 year, we printed 20% of all of the cash that has ever been printed in 1 year. Let that sink in, 20%. I urge you guys to understand that this impact is yet to be felt, but will be felt for years to come, because the Fed can't unprint money. Trillions of printed dollars are now chasing a limited amount of goods and services. And this is what we're feeling. It's called inflation. And I believe that inflation's a lot higher than what we're actually being reported on. I think all of you can agree. You go to a restaurant, the prices have never been higher. You try to go get eggs, those are really high. So there is inflation that's measured by CPI, which is a basket of goods and services. But depending on your lifestyle, you could be spending more on goods and services than what's being reported. Gas inflation, for example, is up over 40%. Durable goods are up over 12%. Medicare is up over 15%. Netflix is up over 11%. So there's another way that you can try to get a better gauge on it, and it's called the CPIE. The inflation rate experienced by seniors is higher than that of the overall economy. From 1985 to 2014, the Consumer Price Index ran at 5.1% behind the CPIE, an experimental measure created by the U.S. Bureau of Labor Statistics to measure inflation affecting elderly Americans. So if CPI was at 7.5% and we added 5.1% in additional inflation, we're actually experiencing something closer to 12.6%. That's the same numbers that we were experiencing back in the 80s. And in the past, as we've tried to manage inflation, we haven't done a really good job at it because inflation is extremely difficult to manage. And we're seeing the Fed fumble the ball right before our very eyes because they have a dilemma. The dilemma is are they going to help try to protect the stock market or the economy? That's what they're going to have to determine. And the truth is that the Fed does not have the tools to fight inflation without risking a recession and more market volatility. 2022 was a perfect example of that. We don't know what they're going to do now. We believe that whatever the Federal Reserve does at this point will trigger the next big demand cycle for gold and silver. So let's talk about the demand for gold and silver. Here's the basic rule of economics. As demand increases for an item of limited supplies, prices tend to increase. And we've seen two big demand periods lasting each around 10 years for gold and silver. The first one, which I think is the most important to mention, is the one that we saw in the 1970s. The 1970s and the 2020s are going to be very similar in my opinion. In the 1970s, we saw the economy be plagued with high inflation and a slow economy, and it got hit with an energy crisis. So gold prices soared up 1,500%. And during that same period of time, silver was up over 2,100%. And guess what the Fed was doing? They were increasing interest rates in that decade. And inflation peaked at 14%. The second big demand cycle we saw was during the 1999 to 2011 era. This was because we saw the Fed policy decrease interest rates. We saw the big Great Recession. We saw the dot-com bubble. We saw the housing bubble. We saw Lehman Brothers collapse. Does that sound familiar? We saw gold go up 700%, and we had silver go up 900% during this big demand cycle as people fled paper assets and they found security in physical assets, specifically gold and silver, in both of these big demand cycles. I believe, in my opinion, one of the strongest indicators of gold and silver entering a big demand cycle is the increase of central banks and states buying gold and silver. Folks, pay attention to this. This is extremely important. Goldman Sachs predicted that in 2022, there'd be an all-time high of central banks buying gold. So let's take a look at what happened. As a whole, the central banks added 463 metric tons of the yellow metal to the reserves in 2021. That was an 82% jump over the amount purchased in 2020. In Q3 of 2022, central banks added an estimated 400 tons. That's 3 times what they did in Q3 of 2021. Goldman Sachs was dead on. And I believe that this is, in my opinion, one of the biggest precursors to the next big demand cycle for gold and silver is central banks buying gold and silver. They have been buying more gold and silver now than they have been buying since the 1960s. The question is, why? One of gold's primary roles for central banks is to diversify their reserves. Diversify their reserves. Same question I ask you. Are you ready to diversify your reserves? And the reason why is because gold carries no credit or counterparty risk. It serves as a source of trust in a country, in all economic environments, and it's making one of the most crucial reserve assets worldwide alongside government bonds. Gold's inverse relationship with the US dollar is another major reserve asset, is an added element to its appeal. When the dollar dips in value, gold typically rises, enabling these central banks to protect their reserves during times of market volatility. So they did a survey and they asked in 2021, why do central banks want to own physical gold and silver. And this is what they cited. They cited that they would like to own physical gold and silver because, number one, it's an effective portfolio diversifier. Number two, there's no default of risk. 3, because of its inverse relationship to the US dollar. 4, its performance during times of crisis. And 5, its long-term store of value. These are the same people, folks, that are controlling the interest rates. They're controlling these interest rates to help either calm the markets down because the inflation's raging too much, or to speed the economy up because we're going into a recession. And what are they doing? They're buying gold and silver because gold is money and everything else is credit. Now, I wish I had a lot more time to go into silver, but there's a major opportunity in silver, and I'll go over some of the bigger reasons why I think silver is another amazing asset class that you should consider owning. The first is that we have a Going Green initiative. Biden's green stimulus could drive the price of silver to $50 an ounce because it's trying to make sure that we go green. And guess what is an important element in all the technology that we're using to go green? Silver. The next reason is the 5G rollout. It's another technology reason. And this is a big one. What we want to do is have everybody have access to the internet. And this big global initiative to make 5G accessible to everyone is going to be highly reliant on silver. The third is silver's historical performance during times of crisis. And I believe we're facing one. Let me just show you what it's done in 2009 and 2010. In 2009, we saw that silver prices were up over 57%. In 2010, up 80%. And the last reason is the gold and silver ratio. Now, this is really, really interesting. So the gold and silver ratio is how much does it take of silver to own 1 ounce of gold. Now, a fun fact, gold and silver ratio today is at 95-1. Its average, 20 to 22 to 1. That means that silver is reasonably, in my opinion, extremely undervalued in comparison to the price of gold. Now, gold and silver ratio has been used by investors to determine the relative value of silver to gold. And investors who anticipate where this ratio is going can make money. So if they believe that there's a big spread like we have now, and that spread's going to narrow, they can make money regardless of which metal rises or falls. The other reason is that the gold and silver ratio has been used by governments to stabilize monetary system, but now it can fluctuate independently and create these massive disparities. And this massive disparity is another reason why I think silver can make a big run. And the ratio is really a popular tool for these precious metals bugs and these traders out there and hedge funds to bet in both of these metals. So that's what I think. I think that in summary, from silver's perspective, we've got the green revolution. We have the industrial use factors. We have its recent historical performance during times of crisis. And then we've got this massive disparity in the gold and silver ratio. All right, now let's talk about the third and final reason why gold and silver prices, I believe, are bound to soar. And that is the other price driving factor of gold and silver, global uncertainty and market risk. Uncertainty and risk. Historically, people have used gold and silver as a hedge against uncertainty and risk. Take a look at this chart. This shows you how gold, which is in gold, and blue, the stock market, have performed during times of crisis. Time and time and time again, gold has outperformed the stock market. That's because not only has gold and silver acted as a hedge against uncertainty and risk, but also it typically sees stronger returns during these types of conditions. So just take a look at what's happened since July 1st of 2022 to today. Gold prices have outperformed the S&P 500. And I believe that this disparity is going to get even bigger over the next 5 to 10 years. Now, in 2000 and in 2008, I believe that we really were pretty caught off guard on what was going to happen next. I don't think very many people were able to predict the big crash of 2008. Many people didn't understand the subprime meltdown. And that is because only a very limited amount of people understood how that whole system worked. But my question is to you today is, do we have a better handle on what's happening now? I'm going to go over some of the things that I think we're facing and tell me how many of these things are a surprise to you. Debt and money printing, inflation, the Fed bubble, supply chain issues, labor market. We're seeing tens of thousands of people being laid off by big businesses. We're seeing political instability and global threats, health crisis, asset volatility, oil prices, rising interest rates, and a possible recession. The key takeaways here is you got to take action. You have to be effectively diversified with an asset that has historically acted as a hedge against such risks and has even gone up in value. So of the three historical drivers of the price of gold and silver, we have the weakening or strengthening of the dollar. In my opinion, the dollar will continue to get weaker. We have the demand that can drive the price of gold and silver. In my opinion, we are beginning the next major demand cycle. And lastly, we have global uncertainty and market risk. And in my opinion, global tensions are rising and the risks are on the rise as well. Based off of this, we believe that based on the current macroeconomic factors, this is the right time to own gold and silver. And this is why we pulled together a group of the best precious metals dealers in America to help you take action. We understand that for most of you, precious metal investing is new. You've never done it before, and you're gonna have a lot of questions. And what I'm about to go into is the exact process of how you can diversify your assets. I'm gonna go and show you 5 ways that people can diversify using precious metals, but more importantly, how you can take your retirement account, this is your 401k, your TSP, your IRA, convert it into what I think is the best investment vehicle ever created for retirees. How you can convert it into this, and most importantly, own physical, that's right, stuff that you can hold, physical precious metals inside of this retirement account. I'm gonna walk you through the step-by-step process, but you are gonna have questions. Why? Because I remember as a financial advisor that every investor watching has a unique story. You have unique goals to you. Your reason for investing, your risk tolerances are all unique to you. And it's important that you work with a professional to help you navigate what type of portfolio, how much you should allocate, how much you should rebalance to this asset class. So you know now why I believe we're about to see the next mega gold and silver boom. I believe that it is all but written that we're gonna see some unprecedented numbers. Gold is already at or near all-time highs as we speak. And guys, I believe this is just the beginning. So now that you understand why it's so important to diversify, now you know why it's so important to own gold and silver, I want to show you the different ways that you can actually diversify your portfolio. The first is through futures contracts. Futures contracts are standardized exchange-traded contracts in which the contract buyer agrees to take delivery from the seller at a specific quantity, at a specific amount that was predetermined at a future delivery date. Now, futures contracts are highly leveraged, and you should know that you can lose more than you invest. Let me say that again. You can lose more than you can invest. So someone who is trying to diversify and protect themselves from risk, I don't necessarily encourage people with low risk appetites to use futures contracts to diversify into gold and silver because of this leverage. But they are highly liquid and one of the most liquid markets in the world. The second is probably the most common way people think that they want to diversify, and that is using gold ETFs. ETFs are financial securities that are traded on the stock exchange, and they track the price of gold. They're not physical gold, but rather a claim on a specific amount of gold held by the fund. These exchange-traded funds perform like individual stocks and are traded very similarly on the stock exchange. This is why they're so popular. They still live in your Vanguard account, your Fidelity account, your Merrill Lynch account, and you can diversify with the click of a mouse.
Unfortunately, ETFs are not physical gold and silver. And there are some important things that you should understand. Unfortunately, ETFs are not physical. It's not actually diversifying, and I'm going to explain why. One is that ETFs have a fund structure. There's a chain of custody. There are management prowess. There's operational integrity that should be questioned, regulatory oversight, and delivery protocols. Let's go into what this delivery protocol looks like. So let's say that you wanted to own gold ETFs for the purpose of actually taking delivery. You can take delivery with futures contracts as well. Here's the big difference. You must own at least 100,000 shares of GLD, and you can only take delivery of 400-ounce bars. These recipients, meaning you, would have to pay all the settlement charges, delivery fees, and taxes when you take delivery. And here's the big kicker, because what we're talking about is a long-term investment here. We want to be able to hold gold and silver, like I said, for 5, 10, or even 15 years. So if you wanted to take physical possession of this, the fund reserves the right to settle in cash, and they almost always do. So if you were looking to use ETFs as a way to really, truly diversify outside of the paper asset class and get into a real physical, tangible asset class that you can hold, this is not the investment vehicle I recommend. Another way that you can do this is through mining stocks. We start to go up the ladder here of a separation, in my opinion, of the true ownership of physical gold and silver, but it's worth mentioning. Gold mining stocks are a share of a company that are involved in the exploration, development, and the production of gold and silver and other precious metals, right? Think of the Gold Rush on Discovery. It's one of my favorite shows. That's a company that you can buy. But the problem with these companies is, guess what? You're exposed to the operational integrity of that company. Profit margins, CEOs, HR issues, and everything else that's related to a company. So although gold could go up in value, that company that you decided to pick or your advisor decided to pick actually might not move in correlation because of the inherent risk of operating and running a business. So let's say you want to diversify that even further and go into mining funds. These are typically a group of mining stocks that are grouped together and ran by a portfolio manager. And now we have an extra layer, in my opinion, of risk. The risk here is, how is the fund manager picking these stocks? What is the fund manager doing? And not to mention the fees that are associated with that. The last is physical gold and silver coins, pieces of gold that are minted by government mints or private mints. They can be bought, sold, and stored. And their value is based on a variety of market factors such as the weight, the purity, the finish, and the availability. Now, did you know that physical precious metals like coins are the most liquid physical asset class in the world? Think about it. How hard is it to sell a home? How hard is it to sell a commercial real estate or a piece of land? Physical assets, one of the things that people don't like about it is its liquidity. Gold and silver coins have an extreme amount of liquidity around it, and it's very easy to get the full value based off of the purity, finish, and availability from that coin at any time, which is truly why we are talking about you as an investor owning physical precious metals inside your portfolio. So now let's go into how you can acquire precious metals. Now, as I mentioned to you, and if the team doesn't mind, I'd like to put this link out now. This link is how you can get access to your $1,200 free gift. You can earn up to $1,000 worth of free silver for a qualified transactions with one of our trusted precious metals dealers. I've done the hard work for you. I have vetted these people out, and I have picked a group of highly sought after, highly trusted, highly confidential precious metals dealers based right here in the US. They have years of experience, and they've helped tens of thousands of investors just like you. In fact, they've done over billions, that's with a B, billions of dollars worth of transactions as a group. And they are the premier recommended group for people like you trying to diversify. And what I want you to do is, as you're listening to how this process works, you're gonna have questions. I know that. There's going to be a way for you, by filling out this form, for you to get a free one-on-one strategy session to talk about your individual needs. As a financial advisor, I used to sit down and talk about the individual goals, plans, and risk tolerances of my clients. All of you here today, I am no longer a financial advisor. I cannot do that and will not do that. And your physical precious metals transaction should be personal. It should be confidential and it should be tailored. You think and know and understand why I'm pushing so much for people to understand this portfolio asset allocation strategy, to diversify. I think you get it that, hey, yes, it's probably time I really took a hard look at my paper assets and asked myself, do I really want to be tied to a bleeding stock market and a struggling bond market in the next 5 to 10 years? Does this decade set up for a bull rally in gold or a bull rally in stocks? Or do you want to make sure that you're hedged and you're protected either way? If that's you, then it's time that you take advantage of this free strategy session and lock in your free fees. They're going to waive all of your IRA setup fees, all of your custodial fees. Trust me, it's one of these opportunities where you're going to look back and you're going to say, I probably should have taken advantage of that, as you see gold and silver prices continue to climb. And again, this is my opinion. It's not the opinion of the precious metals dealers, and I'm not a financial advisor. I'm not an attorney. This is just me, somebody with over 18 years of investing experience. I have my feet on the ground. I get access to information that no one else can get access to because as a marketing company, as an agency, we're dealing with companies that have really amazing, outstanding reports. And I believe that through this evidence and through this information, it's now time to tell you and everybody else who will listen to start to diversify and look at gold and silver as a real viable investment opportunity for you. So there's the link, click on it, take advantage of it today. So how do we acquire physical precious metals? There are two ways. The first is direct delivery. The second is self-directed IRA. Let's go into the direct delivery method. This is very straightforward and pretty much what you probably already have in your mind. What you're gonna do is, hey, I'm looking to acquire precious metals. I wanna buy it in cash. You're gonna fill out this form. They are going to connect you with a top premier precious metals dealer here in the US. You're gonna talk about exactly what types of coins are suitable for you. Then you're going to wire those funds to that precious metals dealer. From there, you're going to fill out a client form and a shipping agreement. And what they're gonna do is they're going to send you directly your gold and silver, and it's gonna be confidential. It comes in completely unmarked boxes. It never says gold or silver on it at all. And most importantly, it's 100% insured. So if there was any issues whatsoever, they will make sure that you get your precious metals delivered to you every single time. And then once you take delivery, you can then store it in a secure facility. Or you may want to put it into a vault. You can do that too. And these representatives will tell you exactly how to do that and what the process is for doing that as well. Now, many of you who are watching today have a paper retirement account. This is your traditional 401k or your IRA. And there are rules of what you can do inside this 401k that was set up by the IRS. So in these paper retirement accounts, you can own things like stocks, bonds, CDs, mutual funds, ETFs, or just simply hold cash. However, like I mentioned to you, there is an investment vehicle known as the self-directed retirement account. This is, in my opinion, the most dynamic, interesting, and powerful investment vehicles you could have as an investor. Why? Because the word self-directed changes the rules. It allows you, the investor, to own physical assets with the same retirement funds that you had in the paper assets. Except for now, with the self-directed IRA, you can own real estate, precious metals, and stocks, bonds, CDs, mutual funds, ETFs, and cash. However, if you have a certain type of retirement account, you might not be eligible. Hence why we're offering this free, completely free strategy session. So we'll take a look at your IRA, 401k, or other qualified accounts. Your 403b, TSP, 457 pension funds, all of these are eligible to roll into a self-directed account. And we're gonna help you do that. We're gonna take it from a paper retirement account and put it into a self-directed IRA retirement account. Think of it like this. You have all a checking account and there's a savings account. The transaction is as simple as moving it from your checking account into your savings account or vice versa. One is a checking account. You can write checks against it. That would be more like a self-directed IRA. And then there's the savings account, which you can have a debit card for, but you can't write checks against. That would be the equivalent of the differences between the two. They're almost identical. Now, once you've done this, we will then fill out this application, get the form set up, open the account, And the teams behind these amazing precious metal dealers companies are going to help you build your portfolio of gold and silver coins. And look, there are a very select group of approved IRS gold and silver coins. You just can't own any physical gold and silver coin. You have to own a very specific type. And they're going to walk you through exactly what those types are so that you do not go out of the covenant with the IRS. And so once you do this, you can then rest assured that you have true portfolio diversification and a real hedge against the bleeding stock and bond market. So in summary, the self-directed IRA process looks like this. Number one, you're going to set up this IRA account, okay? Once this account is set up, you're going to roll over and transfer your existing retirement account. Then you're going to work with your expert to create a portfolio of selected gold and silver coins. Then you're going to have these coins delivered to a third-party storage facility. These are a vault somewhere that you can see and access your gold and silver. And then at any time, because it's a retirement account, you can decide to take, yes, that's right, delivery. Did you know that this is the only asset class that the IRS will allow you to take delivery of when you decide to turn 70 and a half or decide to take a distribution? That's right, it's the only asset class. If you try to take a distribution of stock, they're gonna make you do what? Sell the shares of the stock. Then you're gonna have to rebuy that stock. This is not the case with gold and silver. It's really unique and one of a kind. What you can do is you can pay the tax in cash, but get delivery of the gold and silver coins that you bought years ago inside your retirement account and take advantage of the appreciation once you have delivery of it. So that's how that self-directed IRA process works. It's really simple and it's really straightforward. The hard part is allocating your portfolio to the right coins based off of your risk tolerances. Now, my question to you is this. I asked you to think about 4 things at the beginning of this presentation. How are those 4 things, after what you've seen today, now shaping up in your mind? As I was a financial advisor, I would see that there were 2 types of clients. I had one type of client that would take all of their statements and just put it into their desk drawer and never look at them. And when the markets were really volatile or took a huge hit, they'd call me up and say, "What happened?" Because they were completely oblivious to it. I call them the paper stuffers. And those people were always confused, always the ones taking the biggest hits in their portfolio because they weren't my second type of client. My second type of client was the action taker. These are the ones who were always on the lookout for a new opportunity and a way for them to protect against something coming up. And if you were that person, which I think you are because you're here today, then you have to ask yourself, really, honestly, is your portfolio, your retirement account, the money that you're relying on when you go to retire to keep the same standard of living, to have that house, to have that vacation home, to have that sailboat, to have that lifestyle, to give your legacy away? Are you prepared for what's to come? We've printed trillions and trillions of dollars in the market. We're seeing the first dominoes fall with these banks failing us. The writing is on the wall. This is not 2000, this is not 2008. Okay, we're in a new market era, and this is going to be the most challenging investment era I believe any one of us has faced in the last 50 years. And if I was going to bet on what to do, I would follow what the governments are doing. And as I mentioned, they are buying physical gold and silver for the same reasons why I'm telling you you should consider owning physical gold and silver, to protect and diversify their wealth. And they're buying it at record numbers. Since they've been keeping track of this, we're at all-time highs, and there seems to be no indication that they're going to be slowing down anytime soon. Is that not your wake-up call? Is gold prices already at or near all-time highs not your wake-up call? Something I didn't go as deep into as I really want to due to the time constraints is the de-dollarization that's happening right before our eyes. China has been making moves that are unprecedented, all in what I believe is a plan to dethrone the dollar. And this action will cause a catastrophic series of events that are a complete threat to the stock market, the bond market, and where you probably have your money. So why would you sit around and watch as event after event happens and just say, well, I hope and pray my money's going to be okay? Because not only is this an opportunity for you to protect yourself, this is also an opportunity for you to grow your account and actually make money at the same time. I can't guarantee that. I can't promise that, nor will I ever make that type of promise to you. I won't. But I believe that you're logical. I believe I'm logical, and the evidence is clear. The question is, are you ready to take action, and are you truly prepared? If you have a single question, if you have a doubt, if you're on the fence, if you just don't know the answer to that question, but you want to talk to somebody, that link is there for you. Fill this out. It's completely risk-free. Be that action taker, someone who takes charge of their future. Make sure that you're the one that is in control of your destiny. I'll leave you with this. There's an old adage in investing that says the bulls make money, the bears make money, but the pigs get slaughtered. The pigs get slaughtered because they're too afraid to do anything. Whether you think the market's going to go up or down, bull or bear, make sure that you take action. That's all I have for you today. I hope you enjoy the free gifts and take advantage of the free silver. Thank you so much for joining me today. God bless and take care.